Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. In today's session of automated trading, we are going to work with the Williams R and historical candles. Basically, we are trying to determine the overbought oversold conditions with the help of Williams R, and then we will be using the historical candles to get the desired combination of the price action in recent time leading up to the order execution for our trading. ATR is there for our optimization for the entry and exit scenarios. Before we get started, this is a standard disclaimer. Here I would again like to remind you that this is simply a tutorial session and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of the algorithms, I would suggest that you do extensive trial runs and then run it for sufficient enough time on the demo accounts to get a clear cut idea of the efficiency of the algorithm. Nothing in the webinar is to be constructed as an advice to trade or any particular setup. With that, we start the day. Let us go back to the chart. So what we are trying to achieve in today's setup is first of all we will want the Williams R values to have been in the oversold territory for at least a day for a buy trade, and when we are looking for a sell trade we will need similar kind of setup. We will want the Williams R values to have been in the overbought territory for at least a day. So in both of these times when the underlying instrument has been in overbought or oversold territory for considerable amount of time, and then even after that it is still continuing to fall, and just when it shows some signs of reversing we would want to lap it up that possibility, and that's what we are trying to do in today's setup. So we will be checking the current value of the Williams R and the values a day back using the shift 6. So both these values we will take in mind, and we will want that Williams R values are below minus 80, and for a sell trade this value should be above minus 20. So that will help us determine the overbought and oversold conditions. And on top of that we are going to work with the historical candles. So basically we will be using 5 historical candles. The last candle, if we are looking for a buy trade when the price action has been in oversold territory for sufficient enough time, we will shift our attention for a buy trade, and we will need the last candle to have closed in green. That is, its candle close should be higher than the candle open, but prior to that the 4 candles consecutively should have closed in red, meaning that all those candles closed lower than where they opened. So that will make sure that just in recent past there has been downward momentum, and now this is just the initial phase where on the lower level some buying momentum is coming in, and this is not a start of new run on the downside, but it is still extension of the already oversold scenario, and that's why we are bringing in this condition that the current values as well as the prior values should have been in the oversold or overbought territory for a good enough time. So that is the purpose behind our thinking of working with the historical candles. And now coming to the order execution, we can work both ways. We can keep a bit of a bigger stop loss and target combination and hope of retracement starting and giving us a decent enough profit, or else we can even adopt a scalping kind of approach with a stop loss of say just 1 pips, while keeping the target maybe even 10% of the ATR or in fixed pips. So both of those combination can also be tried, and here both of the combination I think should work well. It's simply a case of which one we are more inclined to work with, and I think we can try both ways. In just a minute, I think my algorithm placed a trade. Anyway, so here we were talking about getting the desired entry and exit, and also the combination for the stop loss and the target price is also equally important. So in our setup we will try to develop a scalping combination, but I am just giving you an idea that you can, as per your requirements, change that combination, and you can extend the target and the stop loss as per your need. So let's get to the work on the Ducoscopy Visual J Forex platform. First of all, we will need to do the instrument subscription. After having worked with the USD JPY, we will get back to the default instrument for this setup, and we will simply work with the Euro USD. So here is our, and I think on candles should be good enough, considering the fact that we are working with a no, I think we will need on tick, as we are going to use the 10 seconds candle as well. So it will be better if the algorithm keeps reiterating after every tick rather than waiting for the new candle to close. So we do the instrument subscription, then we bring in the requirement that there should not be any open or the pending orders in the system. We take the default variable, the default instrument, then we take the tick instrument, and here last tick instrument, and again here also, and now we have to look for the Euro USD. Let's hope we find it quickly. Just a minute. Euro USD, we got Euro GBP, and sometimes it's get frustrating. Many times I struggle to find the Euro USD quick enough. Oh, okay, we got it. So that's it, Euro default instrument, and then the tick instrument should match the Euro USD, and the default instrument should match the tick instrument. Alright, now we get back to the position info. All position amount should be equals to 0. So these are our basic requirement. Now equals again, first input equals, and then we start to get the Williams R, and then the historical candles. We will need 5 historical candles and 1 ATR and 2 Williams R. So here we will take the indicators, Williams R, position amount should be equals to 0, and the candle period should be 4 hours. Shift. It's okay, we can keep it as shift 0. We here need to change it to shift 6. And it's good. Just to be sure, I think suppose if we check for this time around at 1 p 1 GMT, we had, and so it will be better if we use shift 1 instead of shift 0 in this case. So we here take in shift 1, and now we bring in historical candles. We will need 5 of those, and we want info. So indicator, components, info. 5 historical candles of 4 hours each. 1, 2, 3, 4, and 5. Now let us define those. So here we got this. Let us color the flow. Candle 17, candle 18, candle 19, candle 20, and candle 21. So we will need to check the candle open and the candle closing price for each of the candle. Now we change this to 4 hours. 4 hours, shift 1, shift 2, and here again 4 hours, here also 4 hours, shift 3, four hours, and shift 4, here shift 4 hours, and shift 5. So that's the way we will need to go. So we have got these candle combinations which we will need to check later on while defining the entry and the exit points. Now we need to take the ATR as well, and here we bring in the ATR. So here comes the ATR. We use ATR in most of the combinations simply to keep ourselves abreast of the volatility. ATR is like average true range, and an instrument is trading differently in different times, so that's the reason to take the ATR. And we will be checking the difference between the shift 2 candle close and the shift 5 candle with the shift 5 candle open, and we will want those values to be more than difference between those values to be more than whole of the ATR. So here let us go back to the chart. Now we want 1 2 3 4, so this candle's open price and this candle's closing price, that if we subtract this candle's close from this candle's open, the difference should be more than the 100% of the ATR. That will mean that even though price has been in a oversold territory, even after that, just a while back, just recently, it has even fallen further by more than the day's trading range. So it is really in a oversold scenario, and now it is also showing some signs of retracement as the last candle closed with some gains. So that is the reason behind our setup. So this is going to be the ATR value. Now we start to take some calculations here. First will be the difference calculation and the mathematical. So here comes the calculation expression. For the buy trade and for the sell trade, we will need to check the values differently. When the prices are rising, suppose if we are looking for a sell trade, so let us assume we will need to find a good enough example as well, where the so here we have this overbought condition for quite a while now, and at the same time last 4 candles have closed with gains. So what we do, we deduct the candle open of the candle with shift 5 from the candle close of the candle with shift 2, and this value should be more than the ATR. So that is for the sell trade. Now again we come back here, one GMT, so I think that's it, and we go back to the calculations. So here we will need to deduct the for a buy trade, and then for the sell trade it will be different. Now first of all, when looking for a buy trade, we will deduct the last candle's closing price, the candle with shift 2, the prior candle's closing price from the fifth candle open price. So we will need to take the candle 21's open. Now here comes the candle 21's open price, candle open, and we deduct the candle 18's close, candle 18's close, and whatever will be the result, we will be comparing it. A1 minus A2 should be, so it will be by candle difference BCD. Okay, and for the sell trade we will deduct the candle with shift 5's open price from the prior candle's closing price. So for the sell trade the scenario is different. Now mathematical requirement, calculation expression. So here we take candle 18's closing price, so this is right, and we take candle 21's open price, and it should be A1 minus A2, and this will be the sell candle difference SCD. So here now this is the basic requirement for us, and it will help us to compare the required values, and so I think we have brought in most of the indicators and then the candles combination as well. So in today's trading session I think we will leave it here, and then tomorrow we again come back and then straight away start to work with the buy side. If we start in today's trading session, it will extend a lot more than our time limit, and because of that now we leave it here, and only on Tuesday we will be back for the fresh setup. No, not for the fresh setup, the setup which will be in continuation of the development so far, and we will be just adding the buy and the sell side, and then we will do the test runs. So thank you all for joining in. Have a good Friday, and happy Easter to you all. See you on Tuesday. Goodbye.